Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. Hope you're doing well, and if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now in today's episode, we're talking about Polkadot, Cosmos, Ethereum's potential upgrade, Bitcoin's price, and of course our usual 404 logic not found segment. But before we get into all of that, let's kick it off with questions from the community on YouTube and Twitter. And I'll pull those questions up now, but if you want one of your questions answered, make sure you leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit the little bell notification button so you can get notified whenever I post new stuff here on the channel. So let's go ahead and dive into these questions. And the first one is from Adewale David. He says, how are you doing? Please, why do we have a Polkadot old and Polkadot new? When listed on the exchange, the price is different. Now, this is a great question, and there are probably quite a few people wondering the answer to it. Now, what happened with Polkadot is that as it's coming up to launch, the community voted to redenominate the currency, meaning change the denomination of Polkadot itself, or the dot coin. Now, what that means is it works a lot like a stock split, where now 100 new dot tokens, so the new ones that are listed on exchanges, equals one of the old dot. So that would be the old dot that you saw on exchanges before that was a few $100s. So that means now that if you have 100 dot at the price of, say, today, $5.60 something cents, that means that is equal to one of the old dots, which would be basically 100 times that. So you're talking $560 something dollars. And so basically that's all it is. It's exactly like a stock split. Exchanges, though, messed up a little bit because they were listing the new denomination before people had sort of cut over to this new way of looking at it. So it looked like the price of DOT went from the old value, which was 500 something, $300 something dollars, down to like $3 or $4, which obviously did not actually happen. So it caused a little bit of confusion, but that's all it is. It's like a stock split. The new dot is the new denomination, which is 100 new dots equals one old dot. So hopefully that answers your question. I know it's confusing. Angel with the key to the abyss. OMG is blowing up due to Tether. Could you get a bit of the details? So in terms of Tether and Omisco, that's OMG, there was some news last week about the concept of Ethereum being too congested for Tether, the stablecoin, to keep minting new Tether and transferring and basically doing what Tether does. So what they're talking about doing is moving to more and more layer 2 solutions, which are things like Matic, like OMG, etc., like Omisco. And so there was a rumor that Omisco is going to be the latest layer 2 solution on which Tether is going to be minted and used. And so, of course, people are thinking, oh, well, there's new utility now for Omisco, so OMG is going to be more valuable. Buy. I think this is a lot of hype. Not saying that Tether will not be using Omisco or OMG, but I don't know that it really means that the network is more valuable as a result. So just something to think about there. But that's generally why there was such an explosion all at once. All right. Frank Lloyd Tay. I'm a Java web developer. I plan to self-study blockchain and smart contracts. Should I go for Solidity for Ethereum or Cardano's Plutus language? Ultimately, that is a personal choice. So if you're wondering that same question, you have experience in the programming language, you want to jump into something, the easier language to learn, if you have experience with something like Java, is probably Solidity. The more safe language, I would say the more advanced language in terms of its characteristics or your ability to make safe smart contracts more easily, would probably be Plutus. That being said, they're very different. And so as a Java developer or JavaScript developer, you might at first feel way more at home with Solidity. So I'm not saying Solidity is a bad place to go, but it does take a little bit longer to really get comfortable with Solidity because it works very differently to a lot of things out there. And even though the syntax is pretty straightforward, it can be a little challenging to do securely. So it's a personal choice, but if you have Haskell skills, go for Plutus 100%. And if you like functional programming better than the alternative imperative programming, then also go for Plutus for sure. So thank you for your question, Frank Lloyd. Let's go to Pop Defender. Even though my usage hasn't changed by Brave Rewards, they're about 50% less last month and appear to be on that track this month as well. So I think the issue with Brave Rewards right now is that in the world today, we're having issues with the economy, right? And a lot of businesses are struggling right now. And where the ad revenue comes for a lot of this stuff is from businesses. And so there's been a retraction in ad revenue for YouTube, for Facebook, for Instagram, for all of these companies. And I think Brave's in the same boat. There's just less ad volume out there to distribute to everyone. And so my ad volume, your ad volume, the stuff that you're making from these ads, it's just going to be less. Now, I also think that there is something to be said for regionality as well. Certain regions of the world, certain countries get more ads than others. And so that's something to think about as well. But overall, don't be too concerned. This is a long game. And at the end of the day, it's really just about free money at the end of the day. So hopefully things pick back up with the economy as well. Hopefully things start going in a better direction. Thank you for your question. Now, this last question is actually sort of a mini segment of its own. So I'm actually really good buddies with the folks over at BC Vault. They make an amazing hardware wallet. And if you're looking for a hardware wallet, I highly recommend it. Not sponsored in any way. I just really love the wallet. And I've had one since the very beginning. And they suggested to me that we work on something together with this show. And so they've been sending me sort of topics that come up within their support all the time. So like common questions for beginners in crypto that they might need to know that they might not know already. So here's the first one. A lot of people ask, is the crypto that I store on my hardware wallet, like my BC Vault, really inside the wallet? Is it like an actual vault, like a Harry Potter vault where you store galleons? And the answer is no. What is stored on that hardware wallet is actually not the coins themselves. It's actually the keys that allow you to prove that you own the coins that live on the blockchain itself. And so when you have cryptocurrency, you basically have to prove to the network, to the blockchain network, to the protocol that you own the certain coins that live on that blockchain. And to do that, you need a public and private key. And that private key is really what is stored on your device. And so with that key, you can do anything. You can spend them, you can transfer them, you can sign messages, you can do all sorts of things with that key. And that's what you need. So the wallet, the BC Vault, the Ledger Nano X, the Trezor T, all of those, they store your keys, not your crypto. And I know that it's confusingly worded online and people talk about it as if your coins are actually stored there, but they're actually not. So think of it like a device where you'd keep your bank password, and without it, you can't log into your bank and transfer your money. That's as good as an analogy as I can think of at this point, but that is the question for beginners for the day. We're going to keep doing this probably every episode. Hopefully we'll have plenty to work with. So with that, let's dive into the news. Now, right off the bat, I want to touch on Polkadot, which of course is a hot topic, hot enough that it was in the news today or in the questions today. And it's had some huge price growth since the redenomination. Now, at its core, Polkadot is a blockchain interoperability layer on which multiple networks will be able to securely communicate with one another in the future. Now, the Polkadot ecosystem is composed of a proof-of-stake consensus layer or network layer that secures communications between multiple blockchain networks called parachains. Now, these parachains are all built on a common architecture called Substrate, which was also built by the group that built Polkadot. Now, this allows for a true Internet of Blockchains experience that was envisioned by Gavin Wood, the former CTO of Ethereum Foundation and the inventor of Solidity, in his original specification for the Polkadot ecosystem years ago. Now, there are a few people that I trust to deliver on a bold vision like Polkadot, and one of those people would be Gavin Wood. Now, the most recent and groundbreaking news in my book is the recent news that the software engineering shop Snowfork has built core architecture required to connect the Ethereum mainnet today to Polkadot and vice versa. So it's like a bridge. Now, this first version of what will be a more robust bridge later on will now allow for ERC20 tokens, for example, to travel from Ethereum to Polkadot and back, which would be probably a great opportunity to lighten the load for DeFi projects that deal only in ERC20s. Of course, this is strategic because Polkadot needs adoption and Ethereum needs some decongestion. And so this is perfect for both parties where they are today. Now, what comes next is that the bridge will become more fully bidirectional and it will open up a bridge for all types of tokens and for state, which will allow smart contract functionalities to work more widely across this bridge. Now, it's by no means ready for prime time yet, and it will take time to ratchet down security and get all these features built, but Polkadot's also in development, and they've got some lofty milestones that are coming for the fall of 2020, but this is still a huge opportunity for Polkadot to be sort of a layer 2 scaling solution for Ethereum. And then beyond that, it gives Ethereum more interoperability opportunities with other networks where projects like Uniswap could use Polkadot to branch out their swapping service or their exchange service. So really interesting. And I guess this means that tokens or ERC20s could be swapped for Polkadot tokens at some point. So we shall see. But all that being said, Cosmos is also getting in on the fun. And Cosmos is what I would say probably is the only other major interoperability protocol competitor for Polkadot in terms of architecture. And they actually have materially more of their roadmap completed than Polkadot does to date. Now, recently, the first really viable version of the Cosmos version of Ethereum called Ethermint is now live in version 1, which means that developers with products on the Ethereum mainnet can now deploy their dApps fully functionally and fully compatible on the Ethermint proof of stake version of Ethereum that lives on Cosmos's interoperability network. Now, this improved Ethereum network is compatible with the Ethereum virtual machine and all the features that developers rely on today, which allows for dApps to easily migrate from Ethereum to Ethermint. In this case, rather than porting the current Ethereum mainnet over a bridge like we talked about with Polkadot, Ethermint is intended to be an alternative for blockchain developers to use across the board for better scalability, instant finality of transactions, so on and so forth. And considering that all the current Ethereum dev tooling and user experience elements will work with Ethermint from the get-go, the barrier to entry is very low for everyone involved. So this could be a really interesting way for Cosmos and their ecosystem to tempt Ethereum developers away and dApps away that are trying to contend with fees and congestion on the Ethereum proof of work mainnet before 2.0 comes out. So Ethermint, a proof of stake alternative blockchain, what a time to be alive. And speaking of Ethereum, we have talked about Ethereum's fees and how out of control they are the last couple weeks. And I did mention that there is an Ethereum improvement proposal that's being shopped around right now to alleviate this issue. So let's touch on that EIP here. So EIP 1559, that's 1559, is currently being tested by the folks over at Filecoin. And according to them, it's going rather well so far. Now, if you didn't tune in last week, the basic crux of this EIP is changes to the core gas fee structure in Ethereum. Essentially, it would replace the current auction-based system for gas fees in Ethereum with a variable base fee system. Now, today, miners prioritize transactions that have higher gas fees paid because it gives miners more profit along the way, but it also creates upward pressure on fees as everyone competes with higher gas paid to compete for faster transactions. Now, with this EIP, there would instead be a congestion-driven base fee that users would pay for transactions, and then they can tack on additional tips to those transactions to speed them up for miners. Now, the base fee itself would be gauged based on the utilization of the network, and it would increase or decrease based on the congestion metrics. In addition to this, the base fees paid by users would be burnt rather than paid to miners, which is part of the major controversy for this EIP. The trick is balancing the economic scales between users and miners to ensure things operate as normal. Now, the key is that things happen predictably with the fees and that this does not affect the speed or finality of transactions in mainnet. And whenever big changes like this happen, I get really nervous because it's a big change. It's a core change to the way that transactions are priced and how miners get paid, so on and so forth. So it needs to be tested really well. And this EIP is very hotly contested within the Ethereum community, which means it'll likely take months to organize and get done if it ever sees the light of day. Moving on, today's sponsor is Dashlane, which is a perfect opportunity to tell you about their game-changing business offering. Now, in light of the recent high-profile hacking events that have occurred against some of the largest businesses in the world, it's clear that every company needs to do more to ratchet down the security of their systems. And that being said, one of the weakest links in the security profile for many organizations is employees' passwords. And you and I both know that it's hard to remember strong, unique passwords for every site, even though we know we should, even at work. And that's why 70% of employees create weak passwords or reuse them across multiple services. Now, it is those weak and reused passwords that present risk for data breaches and other problems that could potentially cost millions of dollars, a significant reputational risk and damage. So that being said, by far one of the easiest ways for organizations to up their security game is by using Dashlane's business offering. So for as little as $5 per user, you and your team can leverage Dashlane's patented security architecture to help empower employees to create secure, unique passwords for every single account. It allows you to monitor password health across the board and to quickly identify security events all from one central dashboard. They also make it easier to book business trips, manage multiple addresses, and manage autofill payments by keeping company cards and financials accessible and secure for those only who are granted access. Now, the business service from Dashlane enables easy compliance for cybersecurity best practices such as 2FA, policy-based access, and more. So if you're a business owner or you're part of an organization that would like to take advantage of the peace of mind that Dashlane offers, you can start a free trial today for you and your team by heading to dashlane.com/business. And I'll leave that down in the description box below. Now, that brings me to today's 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm, please do hit that like button and get subscribed, because it does tell the YouTube robots that you're enjoying the content that you're watching, that you want to see more of it, and all that good stuff. So thank you in advance for that. Now, today is yet another day where I must criticize a company that I hold very dear, and I need to do it to prove a point. Though they are not the only guilty party in this equation, they are among the most egregious in this regard. And that company is Tesla. And their mistake is one that I would not have ever imagined a tech-focused company like them would ever make. They don't even have two-factor authentication on their user-facing systems. Who knows what's going on behind the scenes, but their user-facing systems do not have 2FA. In a recent tweet, Elon Musk, the CEO of Tesla, agreed and tweeted that they are embarrassingly late on 2FA and that it's coming soon, which in Elon Musk's timeline really could mean anywhere from we see it tomorrow or 2 years from now. Who knows? Now look, I love Tesla. I love what they've done to the lazy automotive industry. I love the cars, and I respect the technological advancements that they've had the guts and gusto to make. However, for a car company, or any company for that matter, in 2020 that has millions of customers and user accounts, and not only that, but user accounts that control and unlock tens of thousands or hundreds of thousands of dollar cars, just to not have 2FA on that is absolutely abysmal. And it shows a disregard for basic cybersecurity practices. And if tech companies aren't even taking it seriously like Tesla, just imagine how many other companies that aren't into tech are not taking it seriously either. Now, the common defense of this is that Tesla haven't had any security issues and that their cars don't get hacked very often, they don't get stolen, but that's just the dumbest excuse I've ever heard. Just because no one's ever wandered into your house in the middle of the night yet doesn't mean you should leave your door wide open at night, because it's never happened, right? I mean, let me make this abundantly clear. In 2020, no company should be allowed to A, not provide 2FA in the first place, and B, only provide SMS 2FA, which is the 2FA equivalent of this meme. Now, if we don't hold companies accountable as consumers, then no one is going to. And we can't allow Tesla, or anyone else for that matter, to not take this seriously, because it's our data at risk. 404, logic not found. In other news, it's another week and another scam or hack that I think you need to be aware about in the crypto space. So I read a Reddit post about a user reporting a bait and switch attack that cost them $350 in Bitcoin. So on a Windows computer, the user was trying to move Bitcoin from Binance to Coinbase. And at some point during the copy paste of the address itself, there was a swap of the address that the user was trying to paste. And of course, they lost funds. Now, the implication is that the hacker might have taken over the user's clipboard and pasted a similar but different address to divert the funds to his or her own wallet. Now, this reinforces the need to double check the entire address for sending any volume of crypto that you own. And even if you're sending it to yourself, make sure you double check it, scroll through it, and make sure it's right. So when you go to send crypto from mobile or desktop, wherever you are, when you paste that address in, take the time to look through the address character by character and make sure it matches the expected address. Now, a quick way to do this is to watch the first and last 6 characters of that address, no more, no less. And if those match up, it's astronomically unlikely your address got swapped. So you can check the first 6 and last 6, and if those match, that's good enough, but I'd recommend doing the whole thing. Now, even more useful is not having to copy and paste addresses at all, which is something that we're seeing more and more on wallets and exchanges, replacing human readable names over top of addresses. And one way to do this is to use Unstoppable Domains blockchain-based domain names, for example, to transfer crypto using addresses. So speaking of that, that leads me directly into the next story, which, as you know, I'm a fan of Unstoppable Domains, who provide blockchain-based domain names and a huge suite of features and tools to make them useful for cool stuff like hosting decentralized websites or even mapping crypto addresses to one human readable name. Now, if you do not yet have a domain, now is a great time to get the best deal, because Unstoppable Domains is doing a promotion until September 1st, 2020, where folks can get up to 30% off of domains when paying using the crypto.com pay option to pay in crypto. And you also will get 10% in CRO rebates from crypto.com too if you do that. So I'll link up some more information about this campaign below if you're interested, as well as links to crypto.com and Unstoppable Domains. And this is by no means sponsored, but I still figured that this is a great opportunity to get a domain at a nice price if you don't have one and you're interested, because they don't do promotions very often. Now, as always, let's talk about Bitcoin's price and what's been happening there. Now, with respect to stability, dare I say, it's been relatively more of the same thing we've seen for a while. Lots of sideways trading, with the exception of some big dumps and big pumps here and there. And it feels weird saying dumps and pumps, whatever. No action above 12K seems to take hold very hard. And the 11K mark seems to be relatively strong, but not impenetrable. So here I am saying things about Bitcoin, and I really have no idea what the future holds. But the field of traders seem to not know either, because the technical analysts seem to be split widely between bearish targets of 9K and then more bullish targets on the other side of 13 to 14K. But it's anyone's guess where we land in that. Now, I did read an interesting study, though, on stablecoin action and what that means for Bitcoin's price itself. Now, Glassnode, a blockchain monitoring source, noted that the stablecoin supply ratio, or SSR, of stablecoins to Bitcoin are at much higher levels relative to where they were at similar price points in July. Now, what this means is that there's much larger percentage measure of buying power in the form of stablecoins against Bitcoin supply. Now, simply put, there is a potentially high volume of stablecoin money waiting on the sidelines, ready to jump into Bitcoin positions, and probably other crypto as well. And this is, of course, speculation at best, but this is the most compelling argument that I've seen in terms of data that shows why we might have Bitcoin price growth ahead. Now, if there's a bigger dip in the near future, I'd expect that some of that stablecoin volume sitting on exchanges starts to flow in a little bit. And this will, of course, start up the controversy about Tether and its role in manipulating the market movements by making things look like there's money on the sidelines when in reality it's kind of manufactured, but that's a story for another day. And with that, if you have some time to stick around, please do check out this video linked up here on the screen about Chainlink's most powerful feature that not nearly enough people are talking about. And of course, thanks so much for watching, and I wish you and your family a safe and happy weekend as well as week ahead. And until next time, cheers.